Good morning, ladies and gentlemen. Again, a very warm welcome to you on Business Day Television. The markets are inching up after 5 consecutive days of red as far as the Lal Street is concerned. The Nifty now up 129 points at 25,210. Remember, the intraday low yesterday was somewhere in the vicinity of 25,000 or so. So a nice recovery coming in after the Nifty went all the way back from a high of about 25,600 or so, which was somewhere in the middle of last week. Tariffs put in by Mr. Trump have hurt sentiment globally, and there is a risk-off trade in the equities market, but not so in the world of commodities, where we are fortunate to welcome Mr. Kunal Shah, the head of commodities trading at Nirmal Bang Securities, a person who deeply tracks global commodities, whether it's supply chains, whether it's production, whether it's positioning of short positions or long positions, and of course, how do they impact the local market. Kunalji, a very warm welcome, sir. And we'll start with the chart of the silver metal. Last time you were with us, silver was somewhere like 92,000 rupees, not very long ago. And today, we've seen it climb above 1,10,000 rupees, which is almost a fresh high if you look at the rupee value of silver. How do you see this market? Is there more steam left?
So first of all, last time when we did the interview, we said that silver likely to outperform gold, and our target was $38 and $40 on CME. So
Yes.
yesterday, silver prices made a high of $39.50, and from there it has corrected to 38.50 kind of levels. So now the fundamental of silver continues to remain very attractive. The outlook for the silver continues to remain bullish, but we have seen a run up from 90,000 to 1,15,000, which is 25,000 rupees, and in percentage terms, if you want to quote 25% rally, we've seen in a matter of 2 months. So $40 psychological level for silver to again show a breakout. But I think $40 in a shorter term looks quite fully priced in, where silver, I would say, fully priced in at $40. If you look at the numbers, the number demand and supply number and deficit, last year the silver deficit was roughly around 180 million ounce, as compared to this year projected to be somewhere at 120 to 130 million ounce. It's a consecutive fifth year where the silver market is trading in deficit, and that's one of the major reasons why silver prices have shot up the way it did. We've seen this kind of rally in platinum and in other metals also, but silver's rally has more wings to fly. Small correction of 1,09,000, 1,10,000, those kind of levels can again retest it. But overall, the trajectory still looks to be on the upside. From a 1 month's point of view, $40. So in India, that should translate to 1,18,000, 1,19,000, those kind of levels. And if you ask me 6 months view from here, or 1 year view from here, we are headed towards $42 or perhaps $44 for that matter. So 1,40,000 is my 1 year target. Shorter term, 1,18,000, and in 6 months we can see silver at 1,25 to 1,30,000. So overall trajectory continues to be on the upside. Bouts of volatility, bouts of profit taking can keep coming in between, but the trajectory still looks very bullish.
Okay. Uh, the other thing I wanted to check with you is that this deficit is mainly on account of production, or is this deficit because of higher demand? What is the tailwind?
So it's a very good question, because most of the people miss out why there is a deficit. Okay, in silver, the silver's 50% of the silver production come from the secondary mines. Those are lead and zinc mine, and these two metals are in the structural consolidation or in a bear market because of the steel production of China going to decline further. So we are not seeing that zinc and lead miners ramping up their production, even though silver prices are up, but their primary product remains zinc and lead. So that is one reason. Second, in last 10 years, there is no significant investment done in silver mining activity. And in South America, the quality of ores have started to deplete. So miners have to dig deep and deep to get the more quality. So the primary production is also not inching up sharply, in spite of the fact that the prices are way above their comfort zone. So these three remains the critical reason that the supply side of silver is weak, and demand side, especially the clean energy, that is solar, and if you ask other sector, mainly solar and green technology, electronics, all these sectors demand is growing at a double digit growth rate. If you look at what has happened to silver panel prices, they are at historic low. The production of China's solar panel is at all-time high. So they are exporting 80% of the solar to the world right now, and that is where the silver's demand is coming. So demand is strong and the supply side continues to remain weak. So that's the reason for us to remain very bullish in silver.
Okay, fair point. So that's been a medium to long term outlook as far as silver is concerned. How about gold, Kunalji? Is gold also in a similar kind of uptrend as far as silver is concerned? Of course, we've had this emotional hit, which is 1 lakh rupees a tola. So that target is achieved. But what now?
I think the likelihood of gold outperforming and shooting up quite sharply from here is very less. We've done our survey, and the survey clearly indicates that the jewelry demand continues to remain weak at this price. Number one. Number two, gold prices have already moved up ahead of its fundamental. So this year was the year when gold prices were expected to move up because of the drop in expectation of drop in interest rate, because of the geopolitical uncertainty, because of a lot of factors. But at $3,500, all of these factors, most of these factors are fully priced in. So on one hand, where I continue to remain very optimistic about the outlook of silver, I believe that gold will continue to remain underperformer and it will lag behind silver. The outperformance of silver will continue for another 6 to 8 months, but gold 3450, 3460 maximum upside I foresee. I don't foresee gold to again shoot up quite abruptly and to test those kind of levels of 1,05,000. I don't expect those kind of levels to take place in gold. So gold, I'm not very bullish, moderately bullish. I would buy gold if it declines to 92, 93,000. Otherwise, I will stay away from the market, and I will not be aggressively buying gold.
Okay, so this is the view as far as precious metals are concerned. In the world of commodities, Kunalji, anything else that catches your fancy on the long side or maybe even on the short side?
Okay, so on the long side, copper looks very interesting. We've seen after hitting $10,000, copper have corrected to $9,500. But the concentrate side of copper is very, very, very weak. The refined copper, we are seeing the glut in the market. So I think when the concentrate market is tight, that is a very bullish reason for the longer term perspective. So I think 875 good levels to go long in copper. 860 should not be breached, and on the upside it has a potential to test 925 to 950 going forward. So silver and copper continues to remain our top picks.
Okay. Any shorts in the market?
When it shorts, I believe that oil, if you look at the backwardation of oil, it is already $100. And yesterday we saw that Mr. Trump gave 50 days time to Russia to sort things out and come to the peace. So these are not very bullish signal for oil. So I believe that oil prices can test, 5,500 kind of levels again going forward. Not very bearish, but for traders, shorting opportunity, crude oil remains a very good option.
Okay, fair point. And would you want to discuss your view on equity markets at this point of view? We've had a bit of a dampener as far as this tariff issue is concerned, EU is reeling under 30%. You have a similar lineup on Mexico, on Canada, even on Japan. Is this a global dampener for risk on trade?
So I can give you a broader perspective, what I make of whatever is going on and what implication it should have on the risk assets. So if you see what has been happening, what Mr. Trump is trying to do is he's trying to encourage the domestic production of goods and services so that the American economy strengthens. That is what his intention is. But we've seen in case of steel, in case of aluminum, none of the smelters or none of the refiners have started to produce them. So after a point, it becomes very difficult for US manufacturing companies or US end users of these metals, if they are not getting those rate at a competitive. So if I'm China, I'm producing a copper wire and I'm buying it at $100. US is making those copper wire at copper with the 30% tariff, $130. So it's not going to be viable going forward until the supply chain response. It will take 1 year, 2 year, 3 year in different cases. So I think at some point, we may see Trump may diffuse this trade tensions going forward, and that can be a very big catalyst. Second, the outlook on the US dollar. So remember, Trump has passed big beautiful bill. Now this big beautiful bill will contribute to another $3.5 trillion of debt. Okay, so right now US is having a debt of $37 trillion with big beautiful bill. Now their debt 1 year down the line will be $40.5 trillion at 4.5% interest rate. They cannot service their debt. So interest rate has to go down drastically. So even though the demand side and the global multipolar world is not very good, it's not a very good news for especially developed market, but the expectation of sharp drop in the interest rate in the US, which will followed by other countries, I think that remains at the center stage for the risk assets. And that is one of the major reasons why, in spite of this tariff, uncertainty, volatility, expectation of inflation going up, global markets are not coming down. So my outlook on global markets, not because of the actual fundamentals, but because the expectation that the dollar will crash going forward, that will drive the risk assets to new all-time highs. So I am pretty optimistic about the broader risk assets, not just particular country, emerging market in particular. If dollar is likely to remain weak, the dollar carry trade will continue. Japanese carry trades may unwind going forward, and this dollar carry trade will drive, right now there is an outflow, but I think that outflow can be reversed in next 1 month, 2 month period, where there is a clarity that the rate cuts are going to take place, an aggressive rate cut will be taking place. So broader outlook for a country like India continues to remain very bullish.
Right. With that, Kunalji, thank you so much for your time. As always, it's wonderful to hear your views on markets which very few people track, and you do so with great expertise and, of course, great common sense. Thank you so much for your time.
Thank you.
That, ladies and gentlemen, was Mr. Kunal Shah, the head of commodities trading and investments at Nirmal Bang Securities, a 3-decade veteran into the world of commodities, and is really bullish on silver. Is silver the new gold? Only time will tell, but I hope you liked the chat as much as I did. Continue watching BTT.
आज का भारत अभी भी सारे जहां से अच्छा दिखता है.
Astronaut Shubhanshu Shukla paying tribute to India from space while bidding farewell to the International Space Station ahead of the undocking